our Diwali special, Samavat 2071. My guests are Manish, Chokhani, Ramesh Damani and Samir Arora. Well, clearly the long-term bullishness, as Mr. Damani said, was a sitter of a ball. It was a half volley, and all of you have hooked it where it should be hooked. All of you extremely bullish on Indian economy and markets in over the next 4 or 5 years. But, okay, Manish, let me start this with you. Since you have your finger in several pies, you're advising Axis, you have, I think, Shoppers Stop, some interest in several companies which are very closely linked to the consumer. Even if you were not, the numbers are not showing that the economy is turning. I mean, the IIP number at 166 or 167, no matter how badly it is calculated, was exactly the same number in August 2013, in August 2012, and in August 2011. It is a stagnation that is stubbornly refusing to go. When will the economy turn?
So, well, the IIP represents really a lot of manufacturing.
Yes.
And manufacturing, as you know, will take its time to turn around. And you had this period where you had the monsoon scare, then you had the whole coal sector getting, back into a mess. So it's difficult for people to announce new projects. What I'm heartened by is that the backlog of projects under implementation are moving at a very rapid pace now. Hopefully we'll be solving the coal and power sector issues as well, which are big segments of the economy. The whole defense establishment getting indigenized is a very big long-term manufacturing move. Because the way the world is, manufacturing is not like the 1980s where China could become the manufacturing entity for the world. There is excess capacity in manufacturing in the world, so therefore it will have to be a bit of import substitution-led manufacturing, which will take its time to build up. Export markets for us to find in a slowing world is a fight for market share, so it will take its time. As far as consumer sentiment goes, I would think it was also wait and watch mode for most people. From what I know of, the retail markets and nothing to do with the boards where I'm, a member of, is that the Diwali sales have been good.
No,
leading up to Diwali, they weren't particularly good, but the last 2 weekends, things have started moving. There was also this whole hangama about Flipkart and Amazon and so on, which led to some confusion in the marketplace. Auto sales were down in September, presumably waiting for Dhanteras, where a lot of deliveries are to go on and so on. And we have a number of investments, on the anvil as well in this space. I think it's the rate of change one is looking for. Like we said, we don't expect big bang reform. You don't expect a J curve to come in the economy. And I would bet that Jan to March quarter, this country will probably end with a 7% GDP number. Because things are all moving in the right direction.
Okay.
If you realize oil price down $20 billion, and of that half goes back to the consumer, it's a $10 billion stimulus to India. And that comes into urban pockets largely. And that will allow people to go out and spend. 10 billion, incidentally, is the number which the previous administration gave as a stimulus in 2008. Yes. So it's large number going back into consumer pockets.
Mr. Damani, are you also smelling the turnaround as quickly as that?
I think so.
On the P&Ls?
What he says, this diesel price, we're not taking the full impact of what that means. And we're not taking the impact of what Mr. Modi is suggesting in terms of smart cities, in terms of Delhi-Mumbai industrial corridor. That will spur up the investment and capex cycle out there. I look at, rather than a top-down approach, like a bottom-up approach, I look at companies after companies, and there will be periods where the companies will slow, but there's no reason to pack your cards and go away to another company. I mean, these are great businesses that are built over periods of time. So I never look at a market in 1 quarter or 2 quarters P&L. I'm happy to take a couple of years view. I've had those consumer stocks in my portfolio 10 years, 15 years. And I see no reason to change them. I think good times are ahead. Whether they'll come this quarter, next quarter, let's see. But
no, I completely take your point about that slightly larger turn in the economy, which will be positive. But are you just smelling that turnaround? Because while we have all these positives and, we in the media have been spouting them for the last 6 months, if not even longer, the actual numbers are still, even the second quarter earnings numbers, are still not speaking of a turnaround. It is still tepid, single-digit.
Can I
yes.
take a step back? I see the US markets as well. And if you were in the US markets, you would have kept saying the economy is going nowhere and 2% growth and it's dead. In that economy, there was Apple, Google, Netflix, eBay, and so many 10 to 40 baggers in that market. And in each of these stocks, they were on single day corrections were 25%. Okay. In each of these great companies of the world which you want to own. So the markets are not meant for people who want nice, steady, interest income coming every month, month on month. You have to take the volatility. You have to believe where this company can be in 3, 4, 5 years. And the wealth which magnifies by holding a long-term winner is something which a trader can never fathom. Enormous wealth creation lies ahead of us, and I don't think we should get swept away by the minutiae of what is this quarter, next quarter, in terms of earning. Directionally, this country is a super tanker which has changed course. It's on course for a 10-year, 15-year, with the demographics the way we have, with the entrepreneurship the way we have, and now the government in place the way we have. It's an irreversible journey. I think if we don't get that message across to all our viewers, we're doing them a disservice. If the aggregate Indian shareholding, ex-promoter and FII, is 10% of the market, what are we discussing? The deposits in the banks are more than $1 trillion.
Yes.
The holding of equity aggregate by Indians is probably $100 billion. If we would just put our interest income into equity every year, we would be far wealthier at the end of the cycle than we will be. So I can only urge viewers, let's not discuss the world and other things. Get our asset allocation right. It's a young country. We are 26 years old. According to me, we should be, the reciprocal of 26 is 74% we should be in equity. 26 should be fixed income. Unfortunately, we don't even put money in fixed income. We are buying real estate and gold. We're not coming where there's wealth creation. And it's a time to be building businesses in India. I see in my private equity avatar youngsters, 30, 35-year-old guys who will build billion-dollar businesses. You've seen Snapchat, Snapdeal, Flipkart. They are 10-year-old stories. They're billions of dollars of wealth creation.
And they're all 25-year-olds.
These are young guys. You may not agree with their valuations. You may not think they have a P&L today, but where are these businesses going? The world is changing. And it's like, this Diwali, guys, wake up. Start your business, invest in equities. That's the only lesson I want to give.
I am coming to that issue definitely, but I just wanted to get this one out of the way. You have abolished the doubts or erased the doubts in terms of the growth story. I agree the timing is a matter of detail. But Samir, come in on that. Does that disturb you at all that the problems are fairly seriously entangled as far as power and coal is concerned, as far as the entire gamut of infrastructure is concerned? As well, consumption and capex have still not picked up, neither investment nor consumption, the two legs of growth. So, I mean, how long would you give this economy? Would you give it 2 quarters, 3 quarters, or like Manish, you're going to be surprised pleasantly in a quarter?
Well, just before that, talking about quarter to quarter, in 2008, the market fell 65%. Or 60% depending on rupee or dollar, but the earnings did not decline 60%. And similarly, next year, that is in 2009, when the market went up 100%, earnings actually went down that year because they were adjusting for the fact that the year is different from the market. So you cannot do it contemporaneous that whether it's like this. So look at it differently. In the last 2 years, from December 2012 to today, the market is up 14% in dollar terms over 2 years. And this is because of currency plus market, but overall the market is up less than 7% per annum. So do you think that's fair or not when US last year went up some 37% and this year is up some 3 or 4% or 0? The point is, it is not so literal. I actually did this for one of my newsletters that for the last 10 years, if you put down the earnings growth of that year and the market movement in that year, there was no connection. But if you did it for the whole 10-year period, it was more or less in line of about 16% per annum for both earnings and the market. So that is number one. But secondly, I would think that if all the elements are in place and you feel that the elements are moving in the right direction, as we can say that there is a bottoming out of economy, that the oil prices are low, that on the margin there are reforms, that on the margin Indian investors don't have equity, that on the margin foreigners are not running away, then these things will happen. All of these things will happen. Now, it doesn't matter whether it happens this quarter, next quarter, but obviously if they don't happen at all, it will be bad. But there's no reason because everything is made up of 5 or 6 or 10 elements, and those 10 elements are in place. Now, talking about infrastructure sector, I was quite negative on the coal outcome, but again, everything in India is told to you before it happens. The people were surprised with the second Supreme Court ruling, but actually it was announced in the first Supreme Court ruling that they find everything illegal. When some scam is found, it was known 1 month before that these guys were in cahoots with some politician. Everything is known. So again, you will know if these things are not working. But because of yesterday's event or today's event saying that coal, that they will do an auction, I still think it's difficult to do it. Who will be bidding, who will not be bidding. But broadly, it will get sorted if they start. The previous government had meetings and did not start some of these things for 2 to 10 years. That is why today the bet is not that this thing has happened, but that it is reasonable to expect that these things will happen.
Okay. Well, actually, we've set the macros enough. We have to take a break and come back straight to sectors, stocks, ideas that investors should watch out for. Back in a minute with my star guests.